Meantime, investors' concerns are mounting over trade talks with China. The Dow dipping earlier and struggling to recover after Bloomberg reported that U.S. officials said that China negotiators are walking back on trade pledges. Joining us now, Keel Point Chief Economic Advisor Stephen Skancke. Stephen, great to see you. Bloomberg actually was reporting that part of the problem here in the negotiations is that intellectual property issue. Your thoughts?
Well, that's certainly one of the issues on the table. That, along with tariffs and requirement of transfer of technology when U.S. companies go to be in China, have been sticking points. It's not unexpected that they will continue to be back and forth on these issues. But in the just concluded National People's Congress, they in fact passed a new legislation improving the rights of intellectual property of foreign companies in China. Now, how that gets implemented is to be seen. But they've been explicit about it, and that's a very positive sign.
But you also think that the president's negotiation skills and the way he's been approaching this, that it's working?
It certainly seems to be working. We have not gotten this far in talking about these difficult issues in any administration prior to this. And it looks a little bit like a hammer on the head when he talks about raising tariffs, but it seems to have worked. It has their attention, and the discussions are ongoing on the substantive issues.
You also say that if there's a little bit of a delay in negotiations and the summit with President Xi doesn't happen until the summer, for example, that's okay, that the market doesn't have to panic.
I think that's actually a good sign. It indicates that they are really digging in on some of these difficult issues rather than deciding that they're in an impasse and they just have to move forward. So do other things. So the fact that they've pushed it off, I think, just increases the probability that we will get a good decision on all of the difficult issues when the two presidents actually sit down together.
Okay, they'll be more prepared to negotiate, hopefully. Meantime, let's broaden out the China conversation because it's been such a buzzword this year. During earnings, we heard a lot of companies worrying about sales in China. Apple certainly was one of them. And there are growth issues in China as well. So given the economic conditions there, trade issues aside, how does the U.S. economy grow when growth in China is slowing?
Well, growth in China is clearly very important for global economic growth, which does have a big impact on the U.S. Economic growth as well. China has recognized the slowdown, and some of these tariff conversations have heightened their sensitivity on these issues. But again, they just completed their National People's Congress and their consultative council, and they've decided to enact further fiscal stimulus, to continue their easy money policy. And we see them already taking advantage of more robust growth coming out of some of the other emerging market countries. Brazil, for example, has had a big turnaround. So those things together, we really expect to see the China economic decline bottoming and turning around and creating a positive economic growth picture going forward, particularly as we get into summer.
Okay, well, JP Morgan Chase CEO Jamie Dimon also speaking out on America's tariff strategy with China. So let's watch this and then we'll react.
They don't work technically because they cause all these various things. But if the president were here, he'd say, they worked, I got them to the table, and no one else did.
So is the president right?
So as a negotiating strategy, it might have worked, yes.
So you agree with that view?
I do, absolutely.
Yeah, it's interesting to hear Jamie Dimon speak out, in terms of his views, because the market, really pays attention to every word that he says. And he's basically saying the president was right here. There was a method to his madness. And with so many issues on the table right now that he's being criticized for, if he does strike this deal with China, do you think there's more room for the market to run? Many people think it's priced in already, but perhaps there still will be cheers. There
would certainly seem to be more room for the market to run when we just look at earnings growth and what a deal with China would do to expectation of better earnings and increased confidence in the earnings projections that we see now. I think that'd be very positive for the markets.
All right, Stephen, great to see you. Thanks so much for coming in.
Thanks, Jackie.
Take care.
Pleasure.
Okay.